Good morning, everyone. Today is November 27th, and it's the day before Thanksgiving. So I expect a relatively slow day in the market. Already this morning, 30 minutes into the session, the market is essentially flat. So I shouldn't say that. Um, S&P's up like 5 points. Yeah, we had a little pop this morning. But anyway, today is probably going to get really dull pretty quick. And then, of course, tomorrow's Thanksgiving. And Friday, the market is open half a day. I'm not sure why, but it always is. So it's uh, it's going to be a nice leisurely weekend. So I thought that I thought we'd have a real casual sort of show today and just look at the markets and look at the open trades, maybe take a peek at some of the pending trades, and maybe do a shortened holiday show today. I know I got stuff to do, get ready for Thanksgiving. So, fortunately, down here in Florida, we have beautiful weather. It's supposed to be 80 degrees today. So, I keep seeing these stories on the news about holiday travel and all these parts of the country that are going to be in for storms and nasty weather and all this type of thing. But yeah, very fortunate here. This is really the nicest time of year. I mean, fall is typically, I consider fall to be, this time of year. So, in all the years I've lived in Florida, which has been many, um, I mean, there's been days where it was 80 degrees on Christmas and this kind of weather, and then there's other times where it's cold. So, but anyway, we're looking at some really nice weather, so that's good news. And so, anyways, on to the market. Pre-Thanksgiving holiday sort of mode here for the market, but check it out. This trend line, I've adjusted this a few times, but it's fitting really good now. You can see you can see these three touch points back here on the trend line, and then actually I adjusted it down a little bit. I think I had a slightly steeper angle for whatever reason, but this fits pretty good. These couple of lows here recently. This market just seems to have a relentless bid under it, and amazingly enough, it's at this juncture. I think that trend line's got a pretty good fit there, and one could safely say that everything's cool until and unless that trend line gets broken. It's a pretty steep angle though. These rallies they tend to go on, and since we're up at all-time highs here, I think that it just sort of feels like everyone thinks that the market's just going to continue to go up. But it could hit a rough patch at any time. Obviously, it could hit a rough patch. And also, let me get to the year to date here. Also, I can't help but think, and you think this each year, but that maybe in the new year, maybe in the new year the market finally corrects or whatever. But it's hard to tell, and quite frankly, trying to figure out what the market's going to do is doesn't make any sense anyway, because it typically confounds the majority of the people, right? And so we're in one of these, and I've seen these before. I was looking at a weekly chart earlier today, and we see these periods where the market like sort of goes on these runs, and it has what I call inertia, right? It's just got inertia, and so as time goes on and you get into a move like this, um, you get people that think, okay, I'm just gonna wait for I'm gonna wait for the next dip, and then I'm gonna buy. Maybe people missed the boat or whatever, and then you have sort of end of the year performance chasing, right? There's probably institutions out there that were a little bit more sanguine on how the market was going to do or whatever, and so anyway, you got a lot of and of course, as I mentioned and been mentioning, that one of the strongest we're in one of the strongest seasonal periods of the year, right? Generally around Thanksgiving over the years, as long as I've been doing this, the small caps tend to you see animal spirits start to happen, right? And so anyway, I was looking at the small caps here, and they've kind of the Russell 2000 is broken out of this crazy sort of trading range that it's been in for so long, and so you're starting to see a little bit of maybe a little bit of people reaching beyond, it feels like sort of, they used to have, I think it was back in the 70s or 60s or something, the Nifty 50 market, where it was like the same 50, everybody was in the same 50 stocks, the 50 must-own stocks. It seems like now that there's like maybe a dozen of them, right? There's maybe, I could probably list about six or eight, just rattle them off the top of my head, of sort of the darlings of the market, the must-own stocks. And then, once you get past Apple and Microsoft and Facebook and that, then people start to, then there's a few like sort of other large cap, Amazon, large cap stocks that they kind of gravitate to. But really, I mean, there's just a handful of the largest cap big name stocks that sort of drive the indexes. I think it was last week I was looking, the S&P hitting an all-time high. I was looking to see what percent, how many of the S&P stocks were actually at all-time highs or whatever. And actually, I just looked at 52-week highs, and it was crazy because it was like like out of the S&P 500, I think it was like 111 stocks were within 3% of their 52-week high, which is like 20%, 22% of the S&P is actually at a 52-week high. So it kind of tells you that it's a little bit of a narrow market. I don't look at the Dow that often. Um, the thing about the Dow, it's pretty amazing how the Dow actually does track. So bad news on Boeing today. Boeing's having more problems or whatever, and it's down. And so, but it's amazing that the market is still able to, the Dow is still able to sort of track the other major indexes so well. The real winner this year so far is the Nasdaq. Obviously, the charts all look very similar, right? Nasdaq on a tear here, and it's not as easy to draw a trend line on the Nasdaq, or on the Nasdaq 100, I should say, but I'd probably just draw it right under those couple of lows there. Anyway, thing about technical analysis is it's really just all about reference points, right? And so I think on these indexes, you draw a trend line like that, and the first warning sign of some sort of a correction or whatever is going to be when these rising trend lines get broken. The one on the S&P really fits well. So, and of course, we got the back here, like I talked about. This is when Trump announced that we had a trade deal with China, which turned out to be sort of I mean, he didn't actually have a deal, right? I mean, they said, okay, we'll work on a deal, we'll make it in phases, and so this whole rally. Every day I look at Reuters to see, what's going on. If you go to Reuters website and click on markets, there's always a headline there in the morning that tells you, why the market's up or down, and the majority of days the majority of these days, it's the market's up or down, or futures are up or down based on trade deal with China. headlines. It's kind of ridiculous, actually, but it is what it is. And then, of course, you get these news headlines that come out about, we're getting close to a trade deal, it's coming along well, talks are going well. Trump comes out, says China wants to make a deal, all this. And so, in the big scheme of things, it's funny because most people, obviously most people in the business, financial professionals will tell you that that's just noise, right? And which it is. I believe that it's a lot of noise. But the funny thing is that it actually does move the markets, right? This rally right here. The funny thing is right here on 10/10 is on this, and this was a Thursday, and then it was late in the day. That's when he announced that we got a trade deal with China, right? And so market closed. The next day it gapped up, and it's been on this tear here. But the other thing is that the Fed right around here, the Fed, and I believe it was like within a day or two. Maybe it was the next day, like on 10/14 or something. The Fed announced that they were going to start increasing their balance sheet again, right? And so now there's a lot of talk, a lot of people out there talking about how the Fed pumping liquidity into the system is what's really driving the market. And the thing about the trade deal is that um, Trump's in a pretty tough spot, right? Congress passed a bill about supporting the Hong Kong protesters, and that really make China mad. And it's sitting on Trump's desk, and he has till Monday to sign it or veto it or whatever. So there could be some drama next week. But thing of it is in the past, all the geopolitical type of things or whatever have always been transitory, right? If the market's moving on geopolitical news, you can bet that, a couple of weeks, a couple of months, a year later, nobody's going to care. So that's one thing that I've learned over the years. Whatever drama is happening right now in the news that's causing the market to do whatever is temporary. So, but here's the real kicker is that earnings are flat year over year. Like S&P earnings have gone nowhere, right? And so that's the head scratcher there. And here you go. I mean, you got three Fed rate cuts, and you got the Fed pumping in all this liquidity into the market. And so, um, because what I was going back to, what the professionals will all tell you is that what drives the market? Corporate earnings, right? I mean, that's what it all boils down to. Corporate earnings drive the market, and then you say, well, but corporate earnings are flat year over year. And then you get into this thing where, earlier in the year, like maybe a third of maybe all this noise in here, you had the global economy slowing down, right? And that's a big thing. China came out with bad numbers last night. Like their industrial production was down 9% or something like that. And you would think, I mean, back in the day, you know a bad number like that out of China would the market would take a hit. You'd get a big down day, and maybe everybody be worried about the global economy slowing down. But this market just seems impervious to any sort of bad news, and I've seen it before. You get these rallies, and they continue to go, and they go further than anybody would expect, and then you sort of get in your mind that man, there's nothing can bring this market down, and that's when you get some sort of a sell off, and there's usually a news catalyst because the entire financial industry exists to explain why the market's moving. Here's something interesting: is that we always like to look at the RSI, right? Well, back over here. 11/14 RSI was over 70 and continued to go up, and then you had this little you can't even call that a dip. It was just a couple little down days here, And so here you are back at the highs, and you got the RSI right back up at 74. And so the market, obviously, the old saying, the market can stay overbought longer than you can stay solvent or whatever. But when the market is, temporarily overbought like this and hitting new highs, typically not a good time to. And I mean, hey, who knows? You could have the proverbial melt up. If this thing were to just really explode higher for whatever reason, um, then that would really just be kind of like a blow off top to this current rally, and so that'd be a good spot to probably lock it in. But anyway, it is what it is, and of course, it's nice to see the market do this because if you think about it, I've been doing this a long time, obviously, and so I'm skeptical. The economy's not that great, and corporate earnings are flat, and there's all this crazy stuff going on out there, and you got the election and all that, and so you kind of have to weigh all the different variables, and but being a chartist, the proof is on the chart. So I will just say that as long as this trend line remains intact, everything's good. Break that trend line, and then you might get some sort of a dip or a correction. I mean, the thing of it is, um, at this point, I mean, you got so much support around these highs here, right? There's tons of support, at 30.20 to 30.30, that sort of zone, these last two highs, that even if the market did correct, and that's a long way down, right? So it would take some sort of a real cataclysm, and you got this high back here. What's this one's? Well, that one's under 3,000, 2954. So anyway, it's all good. Market looking good. Thanksgiving's tomorrow. Seasonality's good. This trend line is sort of pointing the direction higher. Pretty amazing, really, pretty amazing. So I thought we would go ahead and look at these open trades. We've had a few of the open trades have closed, and a couple of them for really nice gains, and a couple of them we had all those home builders. Interestingly enough, this WLH, this was the first home builder that actually opened in the the system opened, right, and then so we had all those other home builders that opened, and basically I was like, it was kind of a little leery of all these home builders. And so anyway, long story short, Pulte basically, ran into the trailing Pulte and KB Homes and Lennar and MTH. All those ran into the trailing stop, like pretty much right around break even, right? The whoop, there they go. And so it was kind of really nothing to it. And I sort of had a feeling that that might happen. Now, a couple of them looked okay. Remember, we went through all the charts in that, but basically, it just turned out to be nothing, right? Like they didn't really get the big push. Although the home builders still look pretty good. So anyhow, they got a little bit of traction. They did okay. Well, let's look at this PHM just for the fun of it. Let's see what happened here. So, oh, hang on. Go back to so PHM. Let's see, the trailing stop was at 38.80, right? Actually, it was here, and then it got moved up to 38.80, and that's where it got hit. I'll just change that. No sense in and so that's basically what happened, right? Not much of a big deal. The trigger, it practically got to break even, but that's the thing, is that you get And and the funny thing is, I mean, it's still going here, but just sort of the nature of the system is that you start getting a rally in the stock, and if it starts to roll back up, and the idea is getting the stop up towards break even as quickly as possible. And so it triggered in here, and then a week and a half went by, and it started to come back, and that trailing stop just basically caught up with the price, and instead of it continuing higher, it got knocked out. And so it's one of the cases where it could have rolled over here, right? It didn't, but it's just one of those cases where it turned out to be sort of a nothing to it, right? And so the same thing, like let's Lennar, same sort of thing here. Lennar, the trailing stop got to 59, right? And so it was like right there, and that's just sort of the nature of the system is that it's going to start off with an initial stop, and then try and bring that stop up. Part of the idea is to not get knocked out by normal price action, but when you get sort of a rollover like this, it's basically saying, okay, better off taking, essentially, it's not quite break even, but we're talking 50 cents. Better off taking that tight stop, um, than letting the thing sort of roll over and go down for a big stop. So, and I mean, so we're talking less than 1% here, right? No big deal. Interestingly enough, that was just sort of a normal little dip, but just the way that everything got calculated out. So, anyways, that's basically what happened. But the one home builder that actually, the one that did, somehow or other didn't quite didn't quite get knocked out was this one. And the funny thing is, this one's been the one that's been open the longest, right? Now it actually triggered back over here. I have it marked because you can sort of see where these highs were, but triggered back over here this day, and so there you go. The trailing stop, up, 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 and right here, it just happened to be just far enough away from the price that it didn't get knocked out. And so at this point, that trailing stop's still at 2060 as of today. I've been noticing on a few of these, and it's just sort of a function of price and time. But a few of these open trades, I've extended like the width of the trailing stop like that because it's been staying the same for a while, right? So this one's looking pretty good. These home builders. The other thing about the home builders, they're kind of slow movers, right? Kind of slow movers, and so um, and they don't have a lot of beta to them. Most of them trade a couple of percent average range. So, anyways, let's go down the list of open trades here. Here's the newest one, Blackstone BX. This one's triggering today. Um, Closed yesterday over the trigger price. Actually, this is what's funny is the trigger price was 52.50, and it closed at 52.47 on Monday. Right, just shy of the trigger price, and so here you go. So yesterday closed over the trigger price, and so this morning's open here is 53.35. Yeah, it's not too bad. Got a pretty nice pattern here, actually. Nice little sort of trend line break here, and pretty nice pattern. Looking pretty good. So here's something else I noticed, and obviously, this stop being down at sort of the bottom of the pattern here. But here's the thing. I'll show you on the very next stock just triggered a couple days ago, and the very first day, boom, the stop just the very first day. I shouldn't say the first day. The day after it triggered, the stop went from the initial stop at the bottom of the pattern to getting slid up, pretty much so. So, anyways, Blackstone looking okay. It's going to need to take out this high, obviously. Long as I'm here, and this is brand new, let me mark the target on here, which is 54.50. Well, that doesn't seem like it's very far up. But of course, everything's calculated based on ATR, right? So, and it's basically it's pretty standard too, and that's what I like about it, right? Because sometimes I scratch my head and I'm like, well, that target doesn't look right, but I know that the targets are all basically the same, just under 3 ATRs of the stock. So there you go. And so like I always mention here, one of the big reasons to not worry about a little bit of a gap up is you just put your if you got in a little bit higher, you just put your target a little bit higher to compensate for it. No big deal. And typically the stocks that go on hit the target will go on a little extra far enough to compensate for any gap not getting in right at the trigger. Just the nature of the market, right? The system detects, like, what Jeffrey likes to call the trade barrier, and on a day-to-day basis, there's just no way. Stocks gap up, they gap down, they do all sorts of stuff. So anyway, looks totally doable. Looks like a pretty good setup there. So this is the one, Wendy's. Wendy's again. By the way, Wendy's was a trade back in October. Ended up hitting the target, and then finally came down. So here's the one I was referring to. So Wendy's another one that gapped over the trigger. Not a big deal, especially especially something like, we're talking 50 cents basically. So 55 cents. But the initial stop went down here at the bottom of the range, and then literally the next day it came up to where it is now at 20.75. And then my guess is after tonight's update, it'll come up, probably close to the actual trigger price. And so based on the price action, I would expect the trailing stop on Wendy's to come up pretty quick. So you just never know what's going to happen with these things, right? Like back here on this trade in October, the trigger price was 20.30, and you had a huge, well, I don't say huge, but you had a big sort of long range day, and it closed considerably over the trigger. But the following morning, it gapped down, and took a little dip there, and you can see what happened. And so, it's just sort of, it's sort of noise. Stocks are going to gap up. Now there might have been some good news here. Um, that looks like some news, and that'll happen sometimes, right? You've got sort of, you got a decent little pattern going here, and then you got this trigger price, and then some news comes out, and maybe that's the reason that it actually even closed over the trigger price that day. So Wendy's looking pretty good here. Um, it's really close to the calculated target right now. 21.85 is the calculated target, and so I'm gonna go ahead and mark that on here as long as I'm on this chart. And obviously that's calculated off of the trigger price here. Whoop, I typed 31. It's a typo. 21.85 is the target on Wendy's. And so basically, adjusting that target for an entry up here would be, let's see, what was the open this day? 21.55, right? So you basically just add You basically just add 55 cents to that, assuming that you just kind of someone followed the exact rules and said, okay, close above the open, or I'm sorry, close above the trigger, buy at the open the following day. What you would do is you would jump in right there without overthinking it. 50 cents doesn't sound too bad. 55 cents, but anyhow, 22. Boy, that will affect the, or at least on the chart here. Adding 55 cents to it, it's gonna put it. It's gonna compensate for the gap, and it's gonna put the target up here. And of course, we've discussed this before. You do have the option of, this is the way that Jeffrey likes the. I'm gonna put the second target just so I have this on here so we can follow it going forward. And hopefully I did all that math correctly on the fly there. But and so we'll see what happens here with Wendy's. I mean, it doesn't, bigger scheme of things, it doesn't really look that out of the question. Back over here, it triggered in and it was looking pretty sketchy, and then all of a sudden one day, massive range day that pushed through the target there. So we got a couple other long range days. This might have been earnings right here. So anyway, it is what it is, and that's how you compensate for it. What I was going to say is that Jeffrey would say that you take a half a position here. That's one way of doing it. You take a half position if it gaps up over the target, and then you just set a limit order for the other half, right? So no big deal. 55 cents. All right, so moving down the list here, Nike. Nike is one of those, we looked at Nike back over here when it was on the pending list about how nice that setup looked, the pullback, the consolidation in this whole zone, and then, of course, broke out of the zone, ran up to the target, pulled back a little bit, and now it's perfect. The trailing stop was just far enough away that it allowed for like this normal sort of pullback here, and now it seems to be back, back on the upswing here, past the target. So looking pretty good. Everything's going good here. This stop at 90, trailing stop at 91.75 is still. I'll extend it one more day here, and you know I'm gonna say it's. I don't always start them like, it's just tough like drawing them on the chart like this. But I'm gonna say that somewhere when the stock was like over here hitting this target, that's when this trailing stop came up here, whether it was this day or this day. Um, but I just extended what I tried to extend it over. So that's another thing. These charts act a little flaky too. Like I draw it like that, and then it decides to change positions. But that's where it is right now. And so this trailing stop has sort of been in place here for a while, and so Nike looking pretty good. I mean, this is almost like a classic sort of cup and handle pattern, right? You got the cup, and then this little part here is the handle, and it's trying right now as we speak to break out of the handle and reach up here towards these highs. So looking pretty good. Yeah, this is almost like one of the perfect examples of how the system was designed. Stocks in an uptrend, has a pullback, and we haven't been seeing a lot of this lately, but this beautiful consolidation. Ideally, I mean, in different market environments and over the years and, thousands of charts and all that, you see everything, but we haven't seen a lot of this recently where you get a stock that has like a pullback and then like sort of a nice range consolidation like this and then turns higher. And so it's a great example here. So there you go. Um, Nike looking pretty good. What's interesting is that this next stock, Lulu, another sort of big name, widely followed stock, and I got so many marks on here, but boy, this has just absolutely been on a tear here, right? I mean, it had this little dip, and once it started this move here, it's kind of like the market, right? Only more pronounced, just sort of almost straight up. Just this little pause here wasn't even a dip. It was basically just it ran up, consolidated sideways for a few days, and then sort of off to the races here. Um, there a parabolic stop, which we haven't seen a whole lot of lately, but a P stop kicked in and did get tagged here. And if you sell half at the target, then it's not a bad idea to sell the other half at the parabolic stop. But I did have someone email me and ask about like selling half at the target and then selling half of what's left over at the P stop and hanging on, with at the trailing stop, and that's actually a pretty good idea because you'd still be in with a much smaller position, obviously, but hey, it's all about percentages here, so we're not worried about the actual share price or how many shares or whatever. But so last night, actually not last night, 221.50. 221.50. There was another P stop, parabolic stop that was generated that basically got tagged up here too. So the parabolic stops, I mean, they're just excuse me, they're just basically there to give you an idea of where you might want to consider locking in more profits, peeling some more off, or just bailing out. And so even if a P stop gets hit, it'll continue. Let's see, 221.50 would have been, so the P stop basically would have been generated. The second P stop, parabolic stop, would have been generated off of Monday's close there, right? So I've seen cases where these things start getting generated, and they're typically when the parabolic stop kicks in, it's typically just under the low of the day where the system detected that it was likely to reverse. And so I've seen cases where that thing just keeps coming up for a few days and doesn't get hit, and then finally gets hit. But you can you can almost assume that when the parabolic stop kicks in, that it's going to get hit fairly quickly because it's going to be right under the previous day's low. So interestingly enough, though, the systems only closes the trade when it hits the trailing stop, and so this current trailing stop at 215 here, it's hanging back just enough so that you could get a little bit of a correction here and still be good. Although today, like tonight, I expect this thing will probably come up like into the 216s, 217. This is going to ratchet up again. So it's just sort of the nature of it, right? You can see I've got all the trailing stops since it originally triggered. So looking pretty good though. Lulu's been a fantastic stock here. You can see, and we've talked about this, the same basic trade back in October, and then a dip, and this is even a more powerful rally here. So that's two trades in this stock in the past couple of months. And speaking of which, GNRC, same sort of thing here. GNRC, here's one that back here in October, same thing. Triggered in October, big run up, closed ahead of earnings, and then just kind of went sideways for a while, and then triggered in again. Actually, I'm sorry, yeah, triggered in like back here, and it's still been going sideways, and then all of a sudden now it's starting to break out again, right? Hitting highs. Pretty nice continuation move, really, of continuation move of this consolidation that happened after earnings came out. And so here's another one where I would expect that I would expect like tonight after the stock update, trailing stop to come up a little bit on this, and probably it's probably going to be close to the break even here, right? Close to the where the trigger was, because this thing's put on a couple of pretty nice long range days here. So looking pretty good. Don't have a whole lot of open trades now. There's only two, four, six, or seven open trades right now, and of course, one is just triggering in today. So there was only six like going into today, and that's sort of a nice happy medium. It's a function of the market kind of perhaps being up near the top of its cycle, but it is what it is. I mean, when the market gets extended, um, there's not a whole lot of because here's the thing is just to reiterate, the system's looking for stocks that are in uptrends, strong uptrends, and then it waits for the stock in a strong uptrend to have a pullback, and then once that pullback sort of runs its course and the stock resumes its uptrend, then we jump on board for the resumption of the uptrend. And what we have in the market here lately is a lot of stocks that are in strong uptrends haven't had the sort of pullbacks that the system's looking for, right? Here's one of those cases where, and we looked at this last week, um, the initial stop, just to calculate an initial stop, was at the bottom of the pattern here, which was sort of an anomaly day. And then literally the very next day, it ratcheted right up into the pattern. And so that's just something to keep in mind. If and this is sort of an unusual case. You almost never see this, but it's just a good example of sort of what can happen for an anomaly. And that's why you don't need to be too concerned about the initial stop being at sometimes like seeming like it's too far away, because it's going to come up almost immediately. So far so good on this one. And here's another case. Well, we looked at this before, where it pulled back just above the trailing stop, and then now it's reversed and looking pretty good. And so, last but not least, is this RNG, which seems to be sort of in a sideways sort of a holding pattern, right? Still looking okay, right? Not looking too bad there. It's gonna have to get through. It's gonna have to get through these previous highs here, right? So there's the target up there, but this thing's just kind of hanging in there, right? The trailing stop is a little bit over the entry. As of the close yesterday, that's down a little bit. This is the only one of the stocks that's actually down today, right? It's down a little over 1%, but it was still up over 4% at yesterday's close, and so it's had a pretty decent. The nice thing about it is it's hanging out above the trigger price, and so it's really just a matter of it catching a little bit of upside momentum here. So that's it. That's the open trades there. Um, all of them, looking fairly reasonable. Nothing really too exciting, but we're not really looking for exciting. We're looking for sort of steady, and we've had lots of that. The CZZ is, I'm going to go to the pending trades now and just look at a couple of these. This was CZZ was one a really nice one back over here, and so it's setting up again. Not quite there yet. Not quite there yet, but it's setting up. It's on the pending list. JetBlue. Let's look at that. Huh, that's interesting. JetBlue on the pending list too. Put a little trend line there. Not sure what to make of this. This is Yeah, these airlines, they're kind of funky. It looks like we had a trade back here, and it kind of, this was pretty nice actually. It kind of had a little pivot low and then ran straight up to the target and then straight back down basically to would have got stopped out somewhere around break even, but it did hit the target first, so it would have worked out back there. But these airlines are kind of funky. I'm not sure how much I like this chart, to be honest with you, but let's look at this next one, this BRKS. Yeah, this one looks pretty good. I like the looks of this chart. So let's see the trigger price on this. Trigger price is like basically like right over these highs here, and of course that can move, right? Depending on what happens here. Um, if it fades down, if it fades down again, right? Next week, maybe the market takes a little breather or something. So this can move, but right now that's a pretty good looking little spot right there. So I actually like the look of this one. Rambus. Hmm. Rambus. This pullback looks very similar to this one. So I'm gonna see Rambus. Same sort of thing. Trigger close above that trigger, and so this also looks like it could turn around and kind of like it did back over here. Sells down, got that pivot low, turns back around and ran up. If I'm not mistaken, this looks like yeah, this was sort of an anomaly too. You see everything, you'll end up seeing everything, but here's one where just happened to have this weird, crazy long range day, and the low was 12.99, and the stop was at 13, and so it just got knocked out right there, right? So it's just sort of the nature of the business, is that you'll get these anomalies, right? And so I mean, it did go on, and of course, obviously, this would have been earnings or news or something, and so, but as far as this sell down here, this could be the pivot low or not, and so that's basically why the system is saying, okay, if it's going to, if that was the pivot low and it's going to reverse and turn higher, then it's got to close over the trigger price, which is a variable, right? So now let's see Winnebago. It's got a pretty nice setup too. This is on the pending list, by the way. So Winnebago looking pretty good there. It's basically looks to me like it's just consolidating this earnings gain here. Zoom out on that. Boy, this thing, Winnebago. Look at that. If you zoom back 2 years, you can see that there's still some room to the upside for it to just get back to where it was a couple of years ago. So, and let's see what else. Tempur-Pedics. This one's got a Temper Sealy, I should say. I don't know why I called it Tempur-Pedics. It's the old mattress company, right? So there you go. Not looking too bad there. Got a decent little pattern. And last but not least, JEC. Well, this one's there's a lot of noise here. So interestingly enough, there was two really good trades in this. This was actually one of the stocks that probably had one of the best. This had the I used this as an example of the trailing stop, right? This was had one of the best series of trailing stops back here, in the late summer before it finally got hit. And then, same thing basically in October here, really nice sort of progression, move higher, and then went into pullback mode, right? And then I don't know what happened a couple of days ago. That could have been earnings. they're still like Nike and Lulu are going to release earnings in December, right? And so there's always there's always a couple of companies out there that have like a weird earnings schedule or whatever. So and so let's see Nike is releasing earnings on 12/19 after the market closes. Boy, that is just a really sort of it's an odd time to be releasing earnings. 12/19. So let's see, that would be yeah, so this is the day we'll close it here on 12/18 at the open, right? Provided that it doesn't get closed ahead of that. It's still a long ways off. My guess is trailing stop, starts to come. Well, the trailing stop's probably going to hang here for a little bit, but maybe like next week it's going to come up a little bit. So there's a lot of time between now and earnings getting released on Nike. But it seems like a sort of a weird time to release earnings. And so let's see, Lulu earnings are on 12/11, which also seems like, let's see, 12/11 after the market closes. And so that also seems like sort of December 11th seems like sort of a weird time to release earnings, but that's when it is. And so there's, 200 dozen trading days between now and when it gets closed ahead of earnings. So anyway, that's that. So both of those looking pretty good. So yeah, we got plenty to work with. There's actually out of the pending trades, there's two or three that have pretty nice looking chart setups. And out of the open trades here, everything's looking fairly decent. And so, and then eventually at some point, the market itself is going to, no telling when, but at some point the market's going to have a correction of some sort of a dip or correction. I would be, let's see, just for the fun of it, I'll zoom this sucker out to the end of the year. So let's see. The end of the year is going to be. I might as well mark it on here. I like to, we get. I like to have a reference point here, just so I can see on the chart when I zoom ahead. Whoops. Yeah, there you go. 12/31. So imagine that. Pretty hard to imagine, but hey, anything can happen. So there's that trend line extended out to the end of the year. What are the odds that the market's going to be able to stay over that trend line from now till the end of the year? I'm just guessing, but I would say probably pretty slim, right? So when you start to, but hey, we've some of these runs that you encounter, they last a lot longer than you expect. Although get a dip or whatever, but I'd say there's a pretty good chance that we get some sort of a little correction, which could it could start next week, right, or any time. So right now, I mean, literally since the market opened, since I've been doing this show, S&P's trading in about 3 point range, up down up down up down. So today's really the beginning of the holiday. Probably lots of people traveling. And then you got tomorrow's Thanksgiving, and then the next day is basically a holiday. Markets open half a day for whatever reason. And so I want to wish all of you a happy Thanksgiving. I hope you enjoy it. And this is a great time of year, and it's my favorite time of year. And so I will see you here next Wednesday. Enjoy your Thanksgiving.